With a look at merger and acquisition activity in the third quarter, we turn now to Matthew Toole, Director of Deals Intelligence for Thomson Reuters. Good to see you, Matt.
Good to see you too.
The numbers you put together are always fascinating. We've got $2.2 trillion in worldwide deal making, and that's down a lot.
Right, it is. Down 22% from the record, which was last year, but still elevated compared to the previous levels that we saw post-financial crisis. So 14, 15, 16, all very elevated compared to a general M&A cycle.
What were some of the interesting trends when you break down that number, whether by industry or something else?
Yeah, I think the interesting part was we saw broad-based declines in all the regions. Most of the regions are down pretty much on track, so there's no real leading region. But we did see the kind of outbound number from China continue to increase, although slowing in the third quarter. We saw record levels of inbound activity, so foreign acquisitions in the United States, from places like China, but also Canada and Europe. So cross-border activity really pushing quite a bit. And then the number of deals actually down just 5% compared to the value down 22. So there's deals happening, but just in a smaller space.
And what about withdrawn M&A?
A record. We saw the year of the mega deal last year. I mean, we knew a lot of them were going to come up to regulatory scrutiny, shareholder scrutiny. So to see some of those pulled was not surprising. But from a value perspective, an all-time record so far this year. And then for the number of deals withdrawn, the highest since 2010. So a number of deals either choosing not to go forward, or for fear of regulation, or actual regulatory scrutiny saying you're not going to be able to go forward in this big deal.
And how about market factors, whether it's currency or equity volatility?
Yeah, so we saw the volatility that we saw in the beginning of the year really affect kind of the beginning of the market, and then kind of really level out in the third quarter. So that hasn't had too much of an impact. We did see a pretty big decline in M&A activity and deal making in general in the third quarter, which is pretty usual due to summer. But I think the macro stories, the Brexit story at the end of June, the U.S. presidential election, a lot of different stories out there that are kind of maybe having some people pause on kind of what they might want to do for the rest of the year or even into 2017.
That's what I was just going to ask you. I mean, at this point, it's like, why even try to get that deal done if you can just start with a clean slate next year?
Yeah, I mean, there's going to be more clarity if, at the end of the year, certainly, if the people are holding back due to some of those reasons. Again, the macro deal-making environment with good balance sheets, a great credit market, cash flow, those things are still there, and I don't think anything's going to really derail them, into next year. So I think if you can afford to wait, it's not a bad time to kind of wait and see what the overall view is of the deal-making market for next year.
And we should touch too on the global IPO market. Really has tumbled as well.
Yeah. So, that's not a surprise with the volatility that we saw at the beginning of the year, but it really has never bounced back. Some are very slow. We did have the strongest week last week, but again, very down. In the US, down 58% compared to a year ago. We had the biggest IPO in China, the biggest IPO in the world last week, or this week, from China, but still very depressed levels. And I think that's going to be a 2017 story because there's not too many windows for those pricings to come through anymore.
So before we get to 2017, we have these things called year-end bonuses on Wall Street.
Yes.
What are we seeing in terms of fee trend?
Well, fees are down 15% compared to a year ago. The M&A fees are up a bit as we see those completions from last year, but the capital markets have been pretty battered by kind of the lack of issuance and the volatility. Corporate bonds, continue to increase mostly due to the M&A financing market, but I think it's going to be a depressed, overall year for the banks across the board for banking revenue, and that will certainly filter down into bonuses.
Matt Toole, always good to see you.
Good to see you too.
Thanks, Matt. I'm Rhonda Shapler for The Street.